Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for Wealth Press. Today is Wednesday. It's March 30th. I'm not even sure if March has 31 or 30 days. We'll find out tomorrow. But anyhow, we're ending March. We're beginning in April. And just so you guys know, April is actually a very, very statistically bullish month for the stock market, not a bearish month. It's actually the third best performing month. I went over that a few days ago, and I'll go over that later in one of my other videos that I'll be doing in the next couple of hours. So stay tuned for that. At NASDAQ down a bit, Dow's down a bit, but in light of the stock market yesterday, I mean, look at this. S&P up 56 points. The Dow up 338 points, NASDAQ up 264 points. That does not look like a bear market. And I mean, look at all the top players. They were consumer discretionary and tech stocks, just as I predicted they would be several weeks ago. Matter of fact, look at consumer discretionary. It's up there. Look at information technology. They're starting to come up. Look at my CSI scan. You're going to love this. Look at where consumer discretionary is right now. Today's March 20, well, this is yesterday, March 29th. This is end of day. Look at a month ago. Consumer discretionary. I told you it was going to start coming up. That's a very, 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 very bullish sign. Now, it's very interesting that technology is still down here because chips are actually starting to come up. So I would be very curious to see how technology is going to hold up in light of all of that. But the fact that consumer discretionary is moving higher is very, very, very positive, especially in the middle of a war with Ukraine and Russia, where the word nuclear has been thrown around several times. So today's a big day, big, big, big day. Yesterday we had consumer confidence come out. The report wasn't stellar, but it wasn't really all that bad. It was kind of mixed. We came in right in the middle at 107. Consensus was 107. We came in at 107.2. Not bad. Hopefully, that'll reflect positively on the GDP. Now, let me give you some guidelines for the GDP and something you should pay attention to, real close attention to. I got something in my eye here. Jeez. Sorry about that. Anyhow, GDP consensus 7.1%. If the report is low, let's say the report is 6%, then the Fed has some explaining to do. Then the Fed can say, potentially could say, hey, we're at war, economy's not growing fast, let's slow down on the slow down on the interest rate hikes, which would mean bonds would go up. So if you see bonds going up today, that's because the number is on the low end. If you see the number on the high end, then the Fed will say, hey, we told you so. We told you so, we told you so, and the bond market can drop. So today's GDP is going to be very, very, very instrumental for the market, and that's coming out before the market opens in about 21 minutes. That's the biggest report for the quarter to give us an idea of how the U.S. is humming along. This is like the engine that we check every quarter. Tomorrow we've got jobless claims, personal income, and employment, but that's the big report of the week, and that drives the bond market. So keep your eye on TLT. And if we can get a rally to the 137, 138 area, I'd love to sell it, but we're not there right now. So we have to just kind of sit tight and wait. Now, let me talk about global economy, and then we'll get into the nitty-gritty, okay? Because the levels are looking great right now. So Wall Street futures were slightly lower, as I showed you, as U.S. stocks gained Wednesday quite a bit following Russia's announcement that it would scale back military operations. I'll see it when I believe when I see it, then I'll believe it. More than 85% of stocks in the S&P rose. Tech, communication stocks helped power the rally. Don't hold your breath; they may be coming down a bit too, along with big retail chains, automakers, other companies that rely on consumer spending, consumer stocks. Apple rose 1.9%, Netflix rose, Ford rose, General Motors rose, but we're not out of this danger zone just quite yet, which is why I'm having short positions. Folks, if you're curious why I have a short position in one of the programs in Ross and in another programs in Zoom, it's because the market can turn on a dime, and we need to be defensive as well. Think. At peace talks in Turkey, Ukraine delegations laid out a framework under which the country would declare itself neutral and its security would be guaranteed by an array of other nations. Biden said he wasn't convinced this would lead to a fundamental shift in the war. And energy prices are surging once again. Now, looking at the various indices, let me just show you what I'm seeing right now. This is very, very important. And this will determine how much of a bounce this is versus the real deal. Now, we're above the 200. Let me just move my, there we go. So we're now above the 200-day moving average on the NASDAQ. This is very, 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 very important. Very, very important. We're now above that 191 level on consumer discretionary. Very, very important. There's a lot of stops in this level. I think the market can rally from this point, but I think we need a couple of days of consolidation. So I'm expecting the market to be rather choppy and not very biased, because look at the upside we've had. And one of the reasons why I haven't been putting on trades the last few days is because look at the upside we've seen. So it's time for the market to pause a little bit and cool off. But overall, things are looking, they couldn't be looking better. I'm telling you right now, they're looking really good. And remember, April is a bullish month. The S&P 500 broke through the major levels, and we're now flirting. We're getting really, really close to all-time highs. Now, we could have said this was a bear trap, but we broke the 200-day moving average and the 50-day moving average. The S&P's at 460. All-time highs are at 480. So, I mean, you could think of it as a possible bear trap, but I don't know. Things are looking really good, and consumer stocks are, as you could see here, starting to come out. So from where I'm sitting, things are looking a lot better than just a bear move higher, contrary to the main trend. This looks to me like a breakout to the upside. Consumer discretionary, technology stocks are up. 5-day trend, technology stocks, consumer discretionary stocks are up. This is the real deal. This is very, 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 very important. So I need you guys to pay close attention to these levels next few days. Again, because the stock market's been just going crazy. I mean, look at this. From 420 to 460, we may have a couple of days of a pullback. So we got to be careful. But the long-term trend is intact. And again, April is a very, very statistically bullish month. It's the third bullish month in comparison to all other months in the stock market. So I'm expecting better and higher prices. Volatility levels. Let me show you. Volatility levels. This is the fear index. We're below 20 right now during a war. Okay. And again, all of this is because of so much liquidity and the money that the Fed pumped into this market. But again, this is a very, very good clue and a very important clue that the market is stabilizing and getting out of this mess. And globally, the COVID situation is getting better. Now, today is Wednesday. So Wednesday, I give you actionable trade ideas. Long side, I think energy stocks are going to start coming up again. I like Marathon Oil. Matter of fact, I like most of these energy stocks. Let me show you some that are looking really good right now, that are just looking great. Occidental looks great. Can't go wrong going with this one. Apache's looking good. We're long this one right now. Marathon, as I've told you. CF Industrial's looking good, but this one has a lot of volatility right now. Devon Energy's looking good. ConocoPhillips is looking really good, and it's got a gap to fill. I like COP a lot, but these energy stocks are looking great right now. To the downside, Unilever, they make soap. This company has lost money. Look at this, 1 year, 3 year, 5 year. It's just not doing good. Earnings per share are not good. It looks like it's also not a consumer stock, consumer discretionary stock. It's more of a consumer staple stock. But I don't think this stock is going to go too much more to the upside. It went from 43 to 46, and I think it's time for it to cool back down. So to the upside, I like Marathon Oil or any of the other high-flying energy stocks. To the downside, I really like this Unilever. Again, it's not a high flyer that looks like it's going to break out to the upside and start making all-time highs. It's been in a downtrend for a very, very long time. I like to short stocks that are in a long, long downtrend. All right. Now, for today, be very, very cautious. Keep your eye on the bond market. If you start seeing a strong rally in the stock market, that means interest rates are going lower. If interest rates are going lower, that means we're getting some relief in the stock market, and bonds are actually up right now quite a bit. They're up 1.25. Let's look at the stock market. Let's look at the futures. Futures are still down, but better than they were overnight. Overnight, we were at 35.50. We're at 35.90. But again, we've been having 600-point moves. So the fact that we're down a little bit right now is not a big deal. Stocks that you want to pay attention to today, Lululemon. The stock is up 7%, positive earnings. And remember, it's a retailer. It's a clothing company. This is very, very good sign for other consumer stocks. And the other stock is Micron. And Micron is up also. The numbers were better than expected. So I'm expecting these stocks to start making the market more optimistic about where we're at right now. I got to say, I am looking bullish, and everything is pointing to higher prices. The only trouble we have is this war and potential COVID flare-ups. But even the COVID flare-ups aren't or don't seem to be making their way to the country. So I think we're in a better shape there. So the markets, folks, they've been up, down this year, to say the least. Every day literally is like a roller coaster. And it can either demolish an account or it can be the greatest edge a trader could possibly have. Now, former $700 million hedge fund manager Jeff Zananeri would argue these are the best conditions for trading his overnight heaters. Click the link below and learn how to benefit from Jeff's heaters and his outlooks on today's market. Folks, you need to watch this. Jeff is on fire. We're going to be actually speaking live today at 11:30 in the midweek roundtable. You don't want to miss it. Follow the link below this video. If you're watching on YouTube, it's in the YouTube Wealth Press channel. Follow the link below this video to check out what Jeff's got to say to you about this market and how he can help you navigate this market effectively. Jeff is spot on. You're going to love what he's got to show you. Check it out right now. Follow the link below. And I hope you're getting value out of these videos. If you are, send me an email, support@marketgeeks.com. Bye. Have a great day and stay out of trouble.